Hi there, welcome to Kneppy Invest. Yesterday, I did a video on a company that helps its clients prolong its assets. And today, I'm doing a video on a company that helps its clients prolong the life of its machinery. And that company yesterday was Duratech. And today, the company I'll be featuring is Laserbond. For full disclosure purposes, I am not a shareholder of this company at this point in time. I have been a shareholder of Laserbond in the past, quite a few years ago, when the share price, I think it was 2018, when the share price did go on a bit of a run. I took advantage of that, but I decided to sell my shares. And at times I have regretted it because I do like this company. And if this company can achieve their financial year 25 goals, I do think there is a fair bit of potential that the valuation of this company will be significantly more than it is now. However, when you look at the chart over the past year, share price has been doing nothing. So the way I'm looking at this right now is I can remain patient. And if I do see a bit of a sell-off in Laserbond shares, say down to 50 cents or something like that, that's when I might take the opportunity of that sell-off and take a position in this company for the long term. For every single company on the ASX, in fact, every single company in the world, I try to assign a quality state to that company. Is it high quality or low quality? And the main reasons I do that is because I treat high quality companies a little bit different than low quality companies. For instance, for low quality companies, it's all about the share price trend and the underlying sentiment, because I don't want to be owning shares in low quality companies for a long time or forever. However, for high quality companies, there is potential that those sort of companies are those stocks that you want to own for as long as possible, because the shares have the potential to just keep on going up. Just think of Amazon, think of Apple. But even for high quality companies, there will be periods of times when the share price goes absolutely nowhere, just goes sideways, or even goes down for a period of time. And even those periods of time, I want to keep on holding the shares because I don't know when the downturn will turn around. Sometimes it can turn around quite violently, quite quickly, but I am willing to trade high quality companies, particularly, it's very important, particularly if I'm already owning shares in the company. I've already talked about what Laserbond does in regards to prolonging the life of a company's or machinery. And not only that, they talk about repairing, refurbishing that machinery to make it like it's new. And that's part of their service division, which is all about repair and refurbishing worn or damaged parts. Laserbond also has a technology division, which designs, manufactures, licenses, and supports tailored service engineering systems in specific applications. They also have an R&D division and also a products division. Now, exactly what Laserbond is trying to achieve, I'll let the company speak for themselves. Laserbond provides advanced surface engineering products and technologies that reclaim worn parts and improve new parts, enabling significant improvement in wear life and performance. Benefits include better than new wear life up to 10 times, higher productivity, lower maintenance costs, energy efficiency, and reduced scrapping of worn parts. Laserbond do have a fairly impressive client list, just like Duratech, the video or the company I featured in yesterday's video. And you can also see by this little list here, which was found in Laserbond's annual report, some of the industries they are working within. Mining and minerals processing, and some of the clients in that sector include BHP, Rio Tinto. In heavy industry, we're talking about Caterpillar, Westtrac Cat, Sandvik. In construction, Transurban, John Holland. Manufacturing, Alcoa, BlueScope. And in energy, AGL, NRG, Energy Australia, and Hydro. The current CEO of Laserbond is a guy named Wayne Hooper, and he joined Laserbond back in 1994. So he's almost been with this company for 30 years. And he joined this company 2 years after it was founded by Wayne's brother. So no doubt Wayne's brother founded this company, and he asked his brother to join the company, and Wayne has been with Laserbond ever since. And now he's a CEO. And that actually is a good sign that he's been with his company for 30 years and that he's the brother of the founder. So you could argue that this is a family-run business, and more than likely, Wayne wants to see this company succeed. So there is skin in the game when it comes to Laserbond. First thing I want to show you in regards to Laserbond is just a chart, a long-term chart, a 10-year chart of the company. And we can see from about 2011 all the way through to the mid part of 2018, share price of Laserbond absolutely did nothing. Share price was going sideways. The highest we did see was back in 2012, and the share price actually did go on a run for about a year up to over 25 cents. But the share price was just range trading between about, so we'll say about 18 and about 7 cents for about 5 to 6 years. And then in 2018, towards the latter period of that year, we did see a breakout in the share price of this company on larger volume. And the share price went from the mid-teens all the way to a high of around about 95 to 97 cents. Didn't quite get up to $1. And that was just prior to the COVID-19 financial panic. And then the share price, just like most other companies on the ASX and international exchanges, fell off a cliff. In fact, the share price fell from nearly $1 all the way down to 25 cents at the low. In fact, it was a little bit lower than that on March the 23rd. But the share price recovered really nicely during 2000 or the rest of 2020 into 2021. And the share price did reach a high of $1.07 in the middle of 2021, so over 1 year ago. And ever since then, the share price has really done nothing. He's just going sideways. And you'll be able to see that when we look at the daily chart over the past year towards the end of this video. Main thing here is if you do look at the last 5 years since 2018, share price has been going up. There's been a lot of volatility there, but generally the share price is going up. And the main reason why the share price is going up is because of the financial performance of the company. And we'll have a look at that during the rest of the video. Now to the financial year 22 results for Laserbond. At a share price of 85 cents, the market cap of this company is a lowly $93 million. It's one of the rare small cap profitable companies on the ASX that has a market cap of less than $100 million. Not only is it small cap with a market cap of less than $100 million, this company is growing, and I'll show you the revenue growth in the next chart. I think there is potential. The market is missing the potential of this company right now. So revenue in financial year 22 was 30.7 million, and it has been growing at a nice rate over the past 10 years. Profit of 3.6 million, operating cash flow 4.2 million, and free cash flow of 2.3 million. And this company also provides its shareholders a dividend. The dividend yield is not that high, but it's still a dividend, and the dividend has been growing. And that's another important aspect to this company, a growing dividend. Now onto the revenue history for Laserbond. This goes back to 2012, so 10 years of history here. And remember when that period of time when share price did absolutely nothing, between about 2012 and 2018, and you can see, particularly from between 2013 and 2016, revenue for Laserbond did absolutely nothing. So the market wasn't excited about this company, didn't really see any potential for future growth. And then revenue starts to grow in 2016, definitely into 2017 and 2018. And that's when the market started to get a little bit excited about this company in 2018. So definitely over the past 7 years, revenue has grown from 10.5 million to 30.7 million. So it's almost tripled in that period of time. The other thing to note here is gross margins have started to increase. And in fact, in 2022, we did see a record year in terms of gross margins at 53.5%. If you calculate the compound annual growth rate in revenue, and this is per share on a per share basis, 8.1% over the past 10 years, 13.2% over the past 5 years, and 5.3% over the past 3 years. I've already mentioned that Laserbond does provide a dividend to their shareholders, and dividend itself isn't important to me. Some investors just see whether a company provides a dividend or not, and that would be their investing strategy. But for me, dividend itself is not important. Growth in dividends is what I'm looking for in companies I invest for the long term. It's not a necessary thing, but when I do see a company I want to invest for the long term, having a growing dividend is a sort of an added bonus. And Laserbond, even though they do provide a dividend, it is on a fairly low dividend yield, only 1.7%. The final dividend yield was 0.8 cents. The interim dividend yield was 0.6, so 1.4 cents in dividends for the full year. But the main thing here, it is growing. And if it continues to grow as a company hits their financial year 25 aspirations, we could and should see the dividends continue to grow over the next 3 years. And talking about aspirations, financial year 25 aspirations for Laserbond, they have revealed a financial year 25 revenue target of $60 million. So double what they achieved in financial year 22. And I really like when companies provide long-term targets like this. It tells me management are thinking about the future, not only the next year, but they're thinking 3 to 5 years down the track. And that is only a good thing because we need more management like this who are thinking long term. Now to the valuation metrics for Laserbond. And to be fair or honest, I'm not a big fan of looking at valuation metrics for small cap companies who have fairly low profits or cash flow. And the reason behind that is because those profits and cash flow are on a low base. So for Laserbond, we're talking about $2 to $4 million. And it wouldn't be surprising, and it shouldn't be surprising, if Laserbond doubles their profit in financial year 23, or even doubles their profit from financial year 23 to financial year 24. And if they can achieve that, a PE ratio of 25.8 would be really small and probably undervalue the company. So that's one of the reasons why I don't like to look at valuation metrics for companies like Laserbond, because sometimes you'll see the PE ratio be really high. So PE ratio might be like 100. And that might seem high and it might dissuade you from taking a position in the company. But then the profit for that company quadruples from 1 year to the next. And then that PE ratio of 100 looks really, really small. So I look at these valuation metrics with a grain of salt. So moving forward, price to sales ratio 3, price to operating cash flow 22.1. In isolation, these numbers don't look too high for an investable company, particularly for a company that is growing and has the potential to grow a significant amount in the next 3 to 5 years. Also did a reverse DCF just to find out the sort of growth this company would have to achieve to justify the current valuation. It's only 15.7% per year. And I definitely think Laserbond can achieve those sort of growth rates over the next 10 years. Probably the only negative thing about Laserbond right now is the chart. And to be honest with you, the management of Laserbond should not be looking at the chart, should not be looking at the share price performance. They should be focused on the business itself. And I really hate going into social media forums. I won't say any names here. And then you look at a forum of a company whose share price is going down, and there's people complaining, shareholders complaining that management should be focused on increasing their share price. No, their job is to grow their company. And if they can grow the company, the share price should respond to that growth. And sometimes the share price of a growing company will fall 50%. We have seen that over the past year. And the management of a company should not be concerned about their share price performance. But if you look at Laserbond's chart over the past year, share price has done absolutely nothing. There's no uptrend, no downtrend here. Share price is just going sideways. But if I do see an appreciable drop in the share price of Laserbond, we almost got that in June of this year, where the share price fell to 64 cents. And based off the fact that I do have a high opinion of this company, and I think there is a really good chance that Laserbond will grow significantly from here, I think maybe I should have thought about taking a position at 64 cents. I do have a share price target where I will take a significant position in this company, and that is at 50 cents. Whether it gets to 50 cents is another question. I think it's doubtful whether it will get to 50 cents. But if I do see share price of Laserbond moving into an uptrend on strength, on increasing volume, particularly if it coincides with some really good financial news, that's when I will take a position in this company. But I think I can remain patient right now because the share price is just going sideways. Share price is not in an uptrend right now. I plan to continue doing this Kneppy's analysis video series for a while, maybe forever, and I am planning 5 videos in advance. And the next 5 companies I'll be featuring in this series include Premium Investments, SG Fleet, Nine Entertainment, Brambles. I've already prepared the Brambles video, and I should be recording that within the next, say, 2 to 4 days. And Advanced Zingtech. I don't think I've looked at this company in the past, so I'm excited to have a closer look at the company. I have had a look at that company in the past, but not a real in-depth look. Premium Investments was a suggestion from a viewer of this channel. So if you do have a suggestion of a company you'd like me to feature in this video series, leave it in the comment section of this video and I'll see what I'm able to do. That's all I have for this Kneppy's analysis video on Laserbond. If you have any questions, any thoughts, or if you can provide any more insights on Laserbond, I'd like to hear your opinions. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.